So you see the headlines, right? The stock market is hitting record highs, everything seems great. But what if there's a completely different story bubbling just beneath the surface, a darker one? Today, we're going to unpack this growing disconnect between the AI-fueled market boom and what's actually happening in the real economy. Let's get into it. One analyst put it pretty bluntly. The slap is turning into a beating. Now, what does that really mean? Well, it suggests that the recent bumps and dips in the market, they aren't just a minor hiccup. They might be the first tremors before a much, much bigger storm. And that, of course, brings us to the billion-dollar question, doesn't it? Is this AI revolution the real deal, a genuine game changer for humanity? Or is it just a massive, speculative bubble that's getting ready to pop? Let's dig into the argument. All right, so to really make the case against all this AI hype, we've got to jump in the time machine for a minute. The whole argument is that we're seeing these spooky echoes of a crisis that a lot of investors still have nightmares about, the dot-com crash of 2000. And hey, real quick, before we dive deeper, if you're getting something out of this, it would be awesome if you'd subscribe, hit that notification bell, and give this a like. Oh, and of course, remember, this is all for informational purposes, not investment advice. Okay, thanks for that. Just take a look at this. It's kinda uncanny, right? Back in 2000, the big story was the internet revolution, and the gold rush was for fiber optic hardware. Fast forward to today, the story is the AI revolution, and everyone's scrambling for AI chips. See the rhyme? Okay, let's talk about the poster child of this whole AI boom, Nvidia. On the surface, everything looks perfect, but when you start digging, some interesting questions pop up. Like, if their chips are selling out so fast, why is their inventory actually growing? And why are there reports of delays in getting paid? The source we're looking at suggests it could be a house of cards, with some partner companies maybe just circulating funds to pump up those incredible sales figures. And, this skepticism isn't just aimed at AI stocks. The argument is being pointed at crypto, too. I mean, think about Bitcoin. It started out as this rebellious, anti-establishment currency. And now it's being marketed as a safe store of value to the very institutions it was supposed to disrupt. Talk about a plot twist. So at the end of the day, from this point of view, what you're seeing isn't a rally built on solid ground. It's a rally built on a story, a really good story for sure, but maybe one that's a lot more fragile than it looks. All right, so let's flip the coin over, because while the stock market is throwing this massive party, the real-world economy seems to be singing a completely different song, and it's a pretty sad one. I mean, just look at this. Consumer confidence in the US hasn't just dropped, it's now lower than it was at the bottom of the 2009 financial crisis. Let that sink in. People are feeling worse about their money now than they did during the biggest recession most of us have ever lived through. There's actually a word for this kind of economic nightmare: stagflation. It's that awful mix of slow growth, high unemployment, and rising prices. It's like your car has a flat tire, an empty tank, and a busted engine all at once. Basically, nothing's going right for the average household. And this is how that stagflation squeeze feels in real life. Your paycheck is buying less, everything costs more, and on top of it all, you're starting to worry about your job security. It's a total triple whammy. And this is where that great disconnect really hits home, right? When people are feeling this much pressure, that shiny story about a booming economy just doesn't add up. So if the system's got all these cracks showing and people are starting to lose faith, where does an investor turn? Where do you even put your money anymore? Well, according to the analysis we're unpacking today, the answer might be turning back to a very, very old friend: gold. Yeah, in a world that feels full of digital promises and just so much uncertainty, some folks are saying enough with the complex stuff. They want something real, something they can hold. And gold has been that safe harbor for literally thousands of years. The thinking is its time might be coming around again. So why gold? And why right now? Well, from this contrarian viewpoint, it's about a few key things. It's seen as a hedge against a financial system that feels a little unstable. Its physical scarcity is a stark contrast to all the digital promises out there. Plus, you've got geopolitical tensions rising all over the globe. And then there's the belief that the Fed is trapped, that they'll have to cut rates, which will just pour fuel on the inflation fire. You add all that up, and it's basically the perfect storm for gold. And we are not talking about a small bump here. The proponents of this view are throwing out some huge numbers, with some targeting gold at $5,000 an ounce. To put that into perspective, that's more than double its recent price.
And hey, it's not just gold getting all the love. Silver is also popping up on the radar. The argument here is that its physical reserves are stretched even thinner, making silver a potential dark horse in this whole flight to safety trade.
Okay, so what do we do with all this? Where does this leave us? We've basically laid out two completely different stories about where we are right now. On one side, you have this incredible story of an AI-powered boom. On the other, a grim warning of a system on the brink. So, who's right?
This table really lays out the two warring narratives, doesn't it? The market story is all about how AI is creating real value, the economy's resilient, and digital is the future. But the contrarian view says, hold on a second. They see AI as a hardware bubble, consumers getting crushed by stagflation, and physical gold as the only true safe haven. So to recap the key takeaways from this whole contrarian perspective we've explored. Number one, this AI rally could just be the dot-com bubble all over again. 2, the stock market might be living in a totally different reality than the average person. 3, the Fed is stuck between a rock and a hard place. Choose recession or choose inflation. And 4, in all this chaos, gold is being presented as the main escape hatch. So where do we go from here? Are we on the verge of another huge market collapse? Or is all this just noise? You know that old saying, history rarely repeats, but it often rhymes? The question this analysis really forces us to ask is, are we hearing the echoes of 2000? And are we listening closely enough?